Welcome to Business, and Owen's back with me. Hello again, Owen. Now, European markets are open. Are the debt crisis fears returning?
It's a fair question, Claire. Good morning. It looks that way, doesn't it? European markets taking a bit of a slide at the opening bell, all of them down. Those are the numbers there on the board for you. You can see markets like the DAX off by around 0.5%. This is one of the best performing markets in the Eurozone right now. Remember, lots going on towards the tail end of this week with the Greek crisis. We'll have more details on that in a moment. On the Asian markets, let's give you the numbers there. The Nikkei closing down around 0.33%. That was after the Japanese government announced a July trade deficit. Remember, they had a trade surplus in June, so conditions still fairly rocky for exporters in Japan.
Let's now take a look at a few more business headlines. Heineken has reported a 30% increase in first half profits of €783 million. The Dutch brewer expects full year results to be broadly in line with the $1.5 billion it made in 2011. The company says it's working towards a swift resolution of a complicated takeover of Tiger beer maker Asia Pacific Breweries.
The US Federal Reserve and Department of Justice are jointly investigating Royal Bank of Scotland over Iranian money laundering. That's according to the Financial Times. The UK bank is facing the same allegations as Standard Chartered over breaching sanctions against Iran over its nuclear programme. 2 years ago, RBS paid $500 million to settle similar charges that its Dutch subsidiary had violated international sanctions.
And the shuttle diplomacy over Greece begins again this Wednesday. The head of the Eurogroup finance ministers, Jean-Claude Juncker, will meet the Greek Prime Minister in Athens. Their discussions will focus on Greek demands for an extra 2 years to implement austerity reforms in return for continued bailout funding. Similar encounters between Greece and France and Germany are scheduled later this week.
Next here on Business, a milestone in the history of free trade. From today, Russia is officially a member of the World Trade Organization. It should mean cheaper food imports for millions of Russian consumers. But investors looking for rapid change will be disappointed in a country which has tended to shield its best assets away from too much foreign interest.
Almost 19 years after it applied, Russia is the 156th member of the World Trade Organization. It means the nation will have to lower trade barriers and expose its firms to more international competition, a process that could help it diversify its exports.
Today, Russia joins the World Trade System with an export structure which is still heavily concentrated on fuels and minerals that represent more than 2/3 of Russian exports. This should be an important contribution to the future diversification of Russian exports, hence of Russian production.
Entrance into the WTO is expected to create growth in the consumer and service sectors, make imported goods cheaper and encourage wage growth. Many hope the move will liberalize Russia's economy and encourage more transparency. But it's unlikely to be a magic wand for national corruption and chronic inefficiency. Moreover, not everyone's happy. Russian food producers may suffer cuts to subsidies, and automakers could flounder in the face of stiff foreign competition.
And that's it for Business. Thanks very much, Owen. That's it from me for now. Do stay tuned to France 24.